The S&P has moved to new highs. I told you I was looking for a perfected sell signal, a 9-count sell signal, and looking for new highs. The 9-count to complete on NASDAQ, we got that. But the VIX is not moving to new lows, at least not so far. And again, we've come back. We've filled the gap. We've come back. We've hit the lower Bollinger Band. And some inverted hammers here, getting a higher low. Could be a discrepancy marks a turn. It still may be we go lower, but again, still see a post-Fed sell-off, as I've talked about, because it doesn't happen immediately. Oh, it didn't happen the Fed day. Post means after. Okay, people become complacent and believe that there is no possibility that it will happen, and then it does. The March high. S&P peaked the following week after the Fed meeting. NASDAQ peaked the very next day. Watching the VIX, you got to get back above the 50-day moving average, but we close back above the lower band here. You got to get, and we're back above the 10 and 20. You got to get back above the 50 and the 200 here for the volatility to return on the NASDAQ. Again, we've got major negative divergences forming everywhere here with momentum. Again, it just barely got above into positive territory while we were above the 50-period moving average, and it's doing that because this negative divergence is forming and likely going to give us a reversal back to this area here. Got a good shot of a head and shoulders pattern. The S&P is making new highs, and they're not being confirmed. Told you, again, going back up, we may hang out up here for a little while and then turn. I believe that the Fed meetings are calling the turns talked about. The S&P and the NASDAQ at new highs, not the Dow. I think that the Dow is going to start going higher, and if we start seeing S&P and NASDAQ turn, and again, you can come up here to the 61.8 fib or higher at the 78.6, probably up somewhere here. They don't have it marked on this chart for a reason. I have no idea why somebody would make a Fibonacci retracement without a 78.6 Fibonacci. That is one of the most popular retracement levels that there is, but nevertheless, they've done it. Again, I think the hammer that I talked about on Friday there, again, I think we're going to recover, and again, we may see this ABC move, as I've talked about. The Dow very well peaked and gotten this double top. As the Dow has been selling off through this last several weeks, NASDAQ and S&P go higher. So again, that could, and the Dow could kind of mask what is going on, the distribution, if we start seeing it with NASDAQ and S&P. Again, we're seeing the RSI move to a new high. We're not seeing it move to a new high on the weekly chart, but again, maybe you end up forming a divergence here later. Maybe you don't. Sometimes you do, sometimes you don't. You have a major negative divergence forming in the weekly time frame. Going to give us some volatility. You can still have, again, a possible rising wedge here in the daily time frame and a head and shoulders formation. It's true for the NASDAQ. Again, the RSI is moving to new highs. So is the MACD. Maybe they form divergences. Maybe they don't. But we do have the divergences in the weekly time frame on the NASDAQ and the S&P in the weekly time frame, watching to see what becomes of those divergences. Now, over here, we started to sell off, and then we ended up going a little bit higher and ended up getting a larger divergence there. Very possible that the divergences in the weekly time frame just start marking a top, and we start seeing prices retreat. And that's the end of it. So we'll be watching weekly charts very closely. Please support the channel with the link directly below. That allows me to be able to provide you this information. If you find the charts useful and you like the indicators, please let me know that by supporting the channel. Just follow the link below. It'll take you to a secured site. You can donate any amount you want. If you take a moment to do that, I would really, really appreciate it. I do need your help at this time, so please consider partnering with me today. I'll be talking about the perfected 9-count sell signal that we got today on the S&P 500. Some other important signals that are developing. NASDAQ's 9-count sell signal. Again, we now have a 9-9 sell signal on both NASDAQ and S&P. We'll be talking about that. And the S&P was up 41 points, up 0.77%. We were up over 1%, but we didn't close at the highs. But you still had a strong close, still wide range bar. So again, you got back above that upper Bollinger Band. You got this negative divergence forming that, again, is likely going to play out in the next few days. And then I think we head back here. And again, down over here, I think we'll be moving towards this 200 period, towards the July Fed meeting, which, again, the Fed meetings have been calling the turns. I think we could turn here in the next few days Allow those divergences to begin to play out. But as I said, we might go higher. That perfected sell signal on the S&P and the 9-count sell signal on NASDAQ, we had that happen today. I was expecting that to get that perfected sell signal on the S&P, but that doesn't mean that this is necessarily the top either. I'm watching the intraday charts, and again, these divergences are forming here in the daily, and you have it in the weekly time frame. Still a really nice looking rising wedge if we exclude the shadow over here. I talk about the channel in the 60-minute time frame, but again, you still got a nice looking rising wedge here on the daily if we exclude those shadows. Now, I made a video over the weekend, posted it Sunday, Father's Day, and happy Father's Day. I hope you had a good Father's Day. You fathers out there. Went through all these market breadth indicators, and for the first 2/3 of the video, I went through these market breadth indicators, all these divergences that are happening. In the most recent price action happening, the peak that we had back in March. Now you have the S&P making brand new highs, and more than half of the stocks, 55% of the stocks on the S&P 500 are still below their 50-day moving average. And it's a handful of stocks, 6 stocks, moving the market. We're likely, again, going to see a post-Fed sell-off, probably a pretty good chance that we could see that this week. Options expiration, we'll have the holiday, we'll have a short trading week. This will be closed on Wednesday. Options expiration at the end of the week. A lot of volatility up and down. As I said last week, I told you the S&P would go higher and confirm the perfected 9-count signal. I thought we'd confirm the 9-count signal and get a perfected signal, and NASDAQ would complete the 9-count today. It did. I told you I thought we'd go higher. We're going higher. Negative divergences are forming everywhere. So if you didn't get a chance to see that video, I went through a load of market breadth indicators, and you have these negative divergences. Worth the time of looking at those various indicators. I don't have time to cover in this video. And I told you that I thought that the S&P was going to quickly, I talked about that upper rising wedge boundary on NASDAQ on the log scaling. We've overthrown it. I've also talked about this upper channel line. We're overthrowing that. And I talked about the shadows. That was excluding the shadows, by the way. And got the divergence going on here. We may be redefining here this level, including the shadows. You still have the divergences on the RSI. Down here on the MACD, it's all over the place on these weekly charts. I told you we're likely going to go higher at the 9-count, the 99 signal completing on NASDAQ. We did that today. We've got this divergence on the awesome oscillator. We've got it on the MACD. We've got it on the RSI. Again, we're likely going to complete a top. But, you know, we're so fast food, fast transportation, fast shipping from Amazon. We have all these things where you turn on cable and or go to some streaming platform and people want to watch immediately what they want to watch. And so in this day and age, people really have no patience. They want it now. So because the market takes its time doing what it's going to do and doesn't turn immediately, then the false conclusion is not going to turn. And these divergences are telling us that, again, it is going to turn. A good shot, you're going to get major reversal. NASDAQ weekly here. Look what happened to the S&P. I told you to watch for this. We didn't get it on NASDAQ, but we got it on S&P. We got a red bar showing up. And I told you, again, we start a turn with a post-Fed sell-off this week. Even if we had a green bar, we can start it. We did. Maybe the bar turns green, but even with our rally, look what happened. We're still getting a red bar showing that momentum could be beginning to wane. And again, the divergence on the MACD, we saw it on the RSI, and here it is on the awesome oscillator. On the S&P in the weekly time frame. And again, the divergence is going to play out. It could happen pretty fast once the selling begins, once we start seeing momentum shift, if the trend signals begin to turn bearish. So we'll be watching. Signals remain bullish right now. I expect these divergences are going to produce a reversal. S&P weekly here with a red awesome oscillator bar. Again, maybe we get the red awesome oscillator bar, go higher, and then we get a little bit of selling that looks like the start of a reversal. Don't get major selling. For the major selling, you've got to put in the reversal, which is what we're looking for if these divergences are going to start to play out. So again, because the market doesn't do it immediately, I mean, it's not taking place. This is a huge sign right here. The fact that we have, again, as I talked about over the weekend, the market breadth indicators, you got half the stocks on the S&P 500 below their 50-day moving average. S&P is making new all-time highs. Now, again, I told you that the market back over here was going to go down to test the 20-week moving average. If we broke it, we can get a feeble rebound for a lower high. If we bounced off of it, we can go back and gap at 5,200 and get a lower high like we had over here, or we might get a divergence like what we had over here. Back and hit the upper channel line or even overthrow it. I talked about that monthly resistance that was directly above it. And I told you I thought we would go higher. And I told you again, I thought we'd still go higher to get a perfected sell signal on the S&P 500. And I think this divergence is going to complete because a peak right here and started to turn down. We never moved to the trend line. I told you I thought we were going higher. Got a little bit of a pullback. And I told you again, we didn't have any kind of major sell signals there. So again, I think we're going up higher, overthrowing this level. And again, to complete this divergence right here that I think is going to play out. Because the market takes its time doing what it's going to do, then people go, oh, it's not going to play out. And then they become extremely complacent, which is what we're seeing right now. And what I told you, I thought we'd go higher. I believe that a reversal will occur, but we close above the previous high we have now done today, which again, showing you the charts and what I'm looking at. I told you over the weekend that, again, we go higher and complete this 9 count on NASDAQ, and that would allow the S&P to move to a new high and complete a perfected sell signal on the S&P. A perfected sell signal, like right here, we got the 9 count. You have to have the 8 or 9 to high the count. It's a 9-9 reversal pattern showing complete price exhaustion. The last 9 count we corrected pretty much sideways, going a little bit lower, but this 9 count will likely lead to a reversal on the NASDAQ. And again, I think we have a possible head and shoulders pattern. And again, in order for this 9 count to play out, you have to get a price flip. What is a price flip? It means the bar closes below the bar from 4 bars ago. So in order to start a new 9 to the downside, we got to close below a bar from 4 bars ago. That would be, if tomorrow's bar is 1, 2, 3, 4, it'd be below. We'd have to close below this low right here, back below the upper Bollinger Band. The following day, it would be this bar, bar 7 right here, and so forth. If I just bring it up close, you can see we got a wide range bar. We closed above the upper Bollinger Band. We continue to close above that upper Bollinger Band. See what kind of candlestick. Now with the wide range bar, you can do a couple things. You can get any kind of a number of reversal patterns, or we could get a doji or a spinning top and get an evening star and get a dark cloud cover. But we'll be watching for a close back below that upper Bollinger Band. Told you I thought we'd complete the count. We go higher here, and S&P would. In fact, that 9 count happened today. Thought we'd go up to the upper boundaries of the trend lines of rising resistance, or possibly even overthrow them. We've done that in the weekly time frame. So we'll be watching what becomes of this 9-9 count on the NASDAQ daily chart. I think we're going to reverse going into the July meeting for the Fed and maybe into September. But if we could just sell off into the July meeting, you can get a head and shoulders pattern setting up, or if it off throughout the summer into the September meeting. We got really bad news from the Fed, and that, or at least the herd thinks it's bad news. I had told you before we had the Fed meeting, leading up to the Fed meeting and the prior week, that we are going to see Fed lower the estimate for the rate cuts from 3 down to 1 or none. It was maybe expecting 2. We saw Fed fund futures in 2, not 1 or none. Actually, it was going to be the Fed's keeping rates at a restrictive level for too long. A sell-off, that's going to be the narrative. Could form this pattern. We'll see what happens. We'll be watching for a close back below the upper Bollinger Band here on the NASDAQ. I told you we were likely going to see a big move up because of the tightening of the Bollinger Bands. Talked about that in early June, and that has now happened. S&P 500, I told you that we needed to see the 8 or 9 bar above bar 7. That did not happen. We went sideways. I told you there was no confirmation of these bearish reversal candlesticks. They're meaningless unless they're confirmed and you get a follow through. Talked about it at great length and detail. So I told you I thought we were going to come up here to start the week off and move to a new all-time high. That has now happened. We got above the upper band once again. for the next close back below it. Here we closed above it but went sideways. When you close back below this, again, could lead to a reversal. And again, we could see that happen this week with a post-Fed sell-off. Post means after. That's why I keep talking about last week, either Thursday, Friday started reversal. We didn't have a perfected sell signal. Couldn't get a confirmation to a reversal bar, a couple of them. I told you if it doesn't happen the week after the Fed, oftentimes it will happen the following week. It did over here. We got the NASDAQ and the Dow peaking over here the day after the Fed meeting. Looking for a move up to that trend line. We didn't reach it with the Fed. That was the Fed day right there. And what happened? NASDAQ and the Dow peaked the day after that same week of the Fed meeting. The next week, the S&P peaked, going 3 points higher, going just a little bit higher, getting a little miniature double top on the intraday charts. It peaked the following week. Then we got the post-Fed sell-off. We see something very similar here. But we could still go higher, still get a doji, a spinning top, or some kind of candlestick, or still the momentum signals turn, we could still go higher. The signals remain bullish. We'll be watching for them to turn back to bearish. Momentum will be the first to turn, and then we'll see signals follow if it is a legitimate turn. I think we have a 5 late, the S&P bouncing off the 50 period here, but it also bounced off this confluence of support. I talked about this at great length of detail. This is the VWAP support, this horizontal support right here, and then we started to go higher, and I talked about this VWAP from the low over here that, again, we were trying to get traction off of. Bounced off that VWAP support, but again, we're still forming a negative divergence, as you can clearly see here, forming that on quite a few indicators in the daily time frame and all over the place in the weekly time frame. Divergences like I talked about over the weekend with market breadth indicators. You're getting a divergence with the S&P, between the S&P and the Fear Greed Index, and I went through and I showed you all of this stuff weekend. Last video, you might want to go back and watch that if you didn't get a chance to watch it. If you're spending time with your Father's Day, I went through the market breadth indicators. And there were just divergences everywhere. But I talked about the bounce that I expected right here off these levels at this low. And again, it never did flip signals back to bearish, signals turned back to bullish. And then over here, we expected a CPI rally and the consolidation, and again, a bounce off this level. But now a divergence is developing, so again, we're likely going to see a reversal again, and probably, or at least you have a pretty good chance that a reversal is going to try to start. If it does, you got a possible top there in the weekly time frame, as we've talked. Bullish, but divergences are developing. In different time frames. The daily S&P here. Again, going to reverse. We got to drop back down below this blue line right here. This represents momentum. This represents the trend. And then we got to see it turn red and stay below it. Start dropping. I expected a perfected 9-count sell signal. And again, we may still go higher. Sometimes you go a little higher than the 9 counts and then you begin to pull back or reverse. Sometimes you do it immediately, but I'll be watching. Does momentum begin to shift? Now just quickly, back over here, we got warning signs of a top. We ended up selling off. We got all kinds of sell signals and momentum signals, trending signals turning bearish, warning that we are going to get a dump. A warning sign of a possible top, these sell signals, the little X's warning a possible top, and then the sell signal, and again, momentum, the little arrow there. The momentum line flipped to red. Again, we had all kinds of warning signs. The little gray area here warns we were going to get a down push. And then over here we had warning signs. By the way, this is the day after the Fed meeting. We went a little higher. Divergences form all over the place on indicators. You had one right here with momentum. And again, it played out. And over here, began to see signs of bottoming signals. Bounced just above the 100 period moving average. And we got circle, the X, this little buy signal here. We began to see the bars turn back to green. When they were over here, we began to see them flip to red with momentum shifting down. And then we got another little buy signal. We saw the momentum line turn to bullish here. The back-to-back bullish candlesticks, they were confirmed. The ones up here were not. Talked about candlesticks needing to be confirmed. Began to see momentum signals flip, and then we began to see trend signals begin to flip. And again, we had this warning that something big was getting ready to happen, and we did see trend flip back to bullish. Momentum went positive, validated it. We got back above this line representing the trend. Bars remained green. They tried to flip to red here and then flip back to green. We got a bearish signal here, back to a bullish signal here, really just showing a bottoming process. Rose up here, got momentum signals flipping, but no trending signals. Warning of a short-term top right here, and again, warning of a major top yet. And again, we still don't have it. We still may see it before the week ends. It's not present now. And again, we're forming a large divergence on indicators here on the S&P 500 daily chart. Momentum line will likely be the first to flip with the bars turning red. Start getting some type of shift in momentum. It will show up here first. If that is a momentum shift that's going to produce a reversal, then we'll eventually see the signals turn back to bearish. The cloud being taken out and this line representing the trend will eventually take these levels out, and it will be validated with momentum going negative. We might see some sell signals up here, some sell signals like what were present over here, if in fact we begin to see the diversions play out on the RSI and the Awesome Oscillator in the weekly time frame. We see a shift in momentum. You can see the trend signals turn, but also the background here in green, start to see a change in trend. If momentum began to flip here and change the trend, we'll begin to see some red here. Background is green right now, representing bullish trend. Bullish trend here, bullish momentum here, and with the green bars. If we begin to see momentum flip with the momentum line, again, we could see a little red arrow begin to show up, again, showing that momentum is starting to wane. It went bearish, but then it went right back to bullish. Here we got a warning sign. Over here, again, back and forth, but then bullish, back to bearish, then back to bullish, and again, got formation of bullish signals. I'll be watching to see if any kind of momentum signals flip this area, but right now, again, my signals remain bullish. I told you I thought we'd still move to new highs. Back over here that I was telling you, again, we were likely going to bounce off that VWAP support, and again, over here, we didn't flip the signals back to bearish. The trend, well, momentum flipped, the trend signals did not. Talked about the bullish patterns here in the 15-minute time frame, these bull flags that keep setting up, the bullish triangle over here, and the bull flag here, and the bull flag here. I told you down over here, this is why I thought we were going to rebound back up after selling off a bit there, and then we formed the bullish triangle. We talked about all this at the time. Over here, we formed a bull flag ahead of the CPI, and I told you, and the Fed, I told you I thought we'd get a rally with the CPI, then possibly with the Fed and a post-Fed sell-off, or a reversal with the Fed. Kind of went sideways there. We got the rally, and then we kind of went sideways with the Fed, but none of those reversal candlesticks were confirmed. We had a divergence over here, and it took us sideways. We had a little divergence develop today that gave us this late day sell-off during the last half hour of trading. Could be we still set up a divergence here. Again, very possible that we get a reversal this week and a top this week. You know, we could pull back a little bit more and then still go higher and then still turn and get something that looks like this or this over here or this over here when we had this divergence that again gave us the pullback for the bull flag. So we'll be watching. It could play out with a lower high just as easily. I'll be watching to see, but right today we did not get, we got a wide range bar. So we'll be watching to see if some kind of candle pattern forms. You know, do we still go higher tomorrow and get a doji or spinning top or something, or dark cloud cover or a shooting star or something like that? Good turn lower. Did we peak and we get a bearish inside day? So just some different things to be watching for. But I'll be watching this for a possible larger divergence going into tomorrow's trading session. We did not get a reversal today. A late day sell-off after, again, breaking out and back testing late last week. We continued and with a successful back test and continued higher. Talked about this pattern over the weekend. On the intraday charts, 60-minute charts, we're getting divergences forming. Here's a NASDAQ 60-minute chart on the MACD and the money flow and a lot of indicators. RSI is moving to a new high, though, and it could form a divergence or confirmation of a lower high. Again, very good chance when the NASDAQ closes back below that upper Bollinger Band, we're holding above it, that a peak on the NASDAQ. So a lot of indicators are forming divergence. The RSI isn't. You don't have to get a divergence. We didn't have one down here at the bottom right here. We didn't have one at this bottom. You don't have to get a diversion. You could, but the RSI moved to new highs. Indicators are making lower highs. I had a trend line. We overthrew it. Watching to see if a channel develops. But like I said, again, count. I'll be watching to see if we peak in the next day or two at some point this week. Pretty good shot that we're going to peak and start a reversal on the NASDAQ and S&P. We do it sooner rather than later. Watching a 15-minute chart on the S&P cash, and I'll be watching some of the signals on the 60-minute charts. End of the day, momentum in the 60-minute time frame began to roll over. I'll be watching to see if that allows momentum to roll over in the daily time frame. But again, we still may go a little bit higher before that happens. Again, here we have this upper boundary here. I'm just, again, drawing a parallel boundary here. I drew it from here. We overthrew that level right there just a little bit. And again, just going to be watching to see what becomes of this. And like I said, again, it may be that we pull back and we still above the 9 count, however it unfolds or whether it unfolds immediately. You got a pretty good shot that this week the market's going to try to peak and start a reversal. But NASDAQ up at extremes. This only gave us a little bit of a pullback and then we went higher. We'll see what becomes of this. Divergences are forming here, but things may not be done yet. We'll see what happens. I expect that they soon will be. Again, signals remain bullish for the NASDAQ and S&P. NASDAQ was up 1.25%. The highs was up right around 1.5%. It was up 242 points and some change. And we've got divergences going on in the daily time frame as well. But the RSI is moving to new high on the NASDAQ. So again, we'll be watching to see if we start seeing some momentum signals turning bearish, and if we close back below the upper Bollinger Band. I warned you we are going to go back above these upper Bollinger Bands. NASDAQ got above it. It's remaining above it. When it starts coming back down, we'll see momentum shift. The RSI is moving to a new high. It could still form a divergence, but it'll have a divergence like we could see here with momentum. But while we have a divergence on the RSI, again, we don't have to get one. Certainly have divergences on the weekly time frame, weekly charts there. I probably should have showed you the 60-minute chart of the S&P when I was showing you this 15-minute chart, so sorry about that. Got sidetracked with the NASDAQ there, but this possible divergence that might develop, again, if we sell off a little bit more tomorrow and then turn back up at some point tomorrow or the day after the holiday, and again, good start, peak and reversal this week at some point surrounding options expiration come Friday. Keeping this in mind, we have the S&P 60-minute chart. Again, I told you to watch to see if a divergence develops here. We went back up when we really got two equal peaks there on the RSI, maybe slightly higher. When we went up, again, we'll be watching to see if a larger divergence develops. 15-minute chart as well. But again, I drew a channel over the weekend here from these highs right here, and we overthrew that ever so slightly here on the S&P 500. And then again, if we draw again another parallel boundary from these lows down over here, from this high right here, and again this trend line being overthrown, we'll be looking to see if we go higher or if it's just an overthrow, if we start a reversal. But well, we've got these two almost equal peaks on the RSI, and the RSI on NASDAQ clearly going higher. You've got the divergence on prime parameter here going on. You've got the divergence going on the MACD down here. End of the session, the last hour, we had the stochastic roll over. Late day sell-off took us back after, again, we talked about these bullish bull flag patterns and so forth. We had previous two bull flag patterns, CPI, and then ahead of this rally here, threw back on Friday and then came back. This is the 5-minute chart. We came back to the 50. We're still seeing the 50 above the 200. Again, in order for a bigger sell-off, you got to take out the 200. Could get a bigger sell-off towards it and then rebound or try to bounce off the 50. I'll be watching, but the divergence on the 5-minute chart did. We had one right here, and then two equal peaks actually give us this, which this little Class B divergence. So again, we'll be watching. Do we get a bigger sell-off and then rebound maybe on that 50-minute chart and form the divergence? Get another one here on the 5-minute chart, or going to sell off immediately. We're going to have to start coming down and taking out the 200 period here on the 5-minute chart. Again, S&P took out that trend line I talked about. Again, We have this level, but again, whether we make it that high or go up higher or whatever, I see momentum flip, but these divergences are forming. Now, the RSI forming that Class B divergence on the 60-minute chart, but you're getting a nice divergence here in a lot of indicators. So again, we'll be watching to see, do we start to roll over? Do we pull back and still go up and try to go a little bit higher and then begin to turn? Got this little nice channel going right here. Again, signals remain bullish. I'll be watching to see momentum flips back to bearish. Momentum here and in the daily time frame. It's on the 60-minute chart here.